Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. As usual, we provide the daily update on the euro currency. Today we take a look at a couple of moments. First is a overall fundamental background on the market, which actually explains the recent performance in the recent sessions today and yesterday, and potentially the trading plan that we could create in the current circumstances. Although, for the truth's sake, we have to say that it's a lot of uncertainty right now. So the big media in the recent few days were busy with the coming meeting of the Putin and Donald Trump in Alaska. Personally, I think that hardly we will get any breakthrough in this meeting. I'm not sure that Donald Trump actually has independence with the political decisions that he could make, but markets, investors think different, and that makes some pressure on the performance. In fact, the short-term bullish context that we discussed in the last week, now at the edge of the failure. It seems that we could get a bit deeper retracement. Why it is possible? Just because if we theoretically suggest that some really big decision will be made on negotiations on the Trump and Putin in Alaska, so it could make really big impact on the euro and the Euro Union as well. Because if they will come to agreement, that will definitely boost the United States dollar and Donald Trump position in general, and it's put on not very comfortable position of the European Union that supports the Ukraine in this war. So, as I said, personally, I do not believe that we will get some really big, decisive result of this meeting. But this explains why you see the performance that you see, why the market actually is going lower. This is not only about the euro; it's in general mostly the demand of the United States dollar. So if you take a look at the 10-year bonds, this is daily chart. Market flirting with the May city. It suggests that if we will get the grabber, it might be the drop. But what will be the drop? What will be the demand for long-term bonds? We know the results of the auctions on the previous week. It was really poor result for long-term bonds in the United States. No demand. By what reasons yield could drop here below the 4.2? Obviously, this will be some safe haven demand. Why it could happen? Or demand for United States assets if the big situation will change. This might be only the result of the agreement with Russia and the United States, and some big geopolitical questions. So that could drastically change the situation, and that makes pressure on the market for now. The same you can see on the dollar index. On the dollar index, we could see this kind of action. We do not see the same action on the euro currency. We do not see some spikes down and return right back up. On the dollar index, you could see it. So, not occasionally in the weekend, we said that this will be really vital area for euro currency, mostly because we mentioned that don't forget that we have the bearish reversal swing. After bearish reversal swings, market shows deep retracements, usually 618, and that's already is done. And here is a big question. The confirmation of the bullish sentiment will be only if market will keep going higher and prove that this is not just retracement, this is continuation of this big trend, but retracement was right here. If it will not do this and start dropping lower, that might be interpreted as a continuation of this action. So we could get, as we mentioned, some kind of the big ABCD pattern, or at least it could keep going to the XOP target of this ABCD pattern to the downside. So that's why this situation is very important. At the same time, if you take a look at the fall time frame chart, there are a few moments that personally I do not like, and actually it doesn't correspond to the normal bullish performance. Let's take a look. We have the reversal on a 4-hour time frame chart after significant breakout of the big resistance triangle. Here was grabbers were formed, and that has happened right under the major target here on the 4 time frame chart, 1730. It was very close. But instead of that, you can see market dropped out of these consolidations, grabbers have cancelled. Now it stands at the same strong support of the 1580, 1592. So this type of action that we see here, that this was erasing of the important bullish patterns and inability of the market to complete the OP target, together with the performance of the 10-year yields right now. It makes me think that it would be better to not hurry up with the decision making of the new long position taken, because here, if market was not able to complete the target when there are no barriers actually, so it's already start forming the consolidation here. But announced the meeting of the Donald Trump and Putin, it's actually changed the situation in the market. Investors start preparing for some surprises. It's just decreasing the maybe positions on the more risky assets and start preparation for possible unexpected results of this meeting. It might happen. So that explains this situation. It means that potentially we could get deeper retracement. On the hourly chart, for now, you could see that market is forming some kind of the flag consolidation. Market right now stands at the OP, in agreement with the confluence. This is great area in other situation to consider taking the long position. But for now, before making decision, I would prefer to see what will happen. So whether we will get here some bullish patterns around it. If, for example, we will get some butterfly here or something, we could think about taking a long position here. But for now, this is mostly bearish continuation pattern that market is forming here. Downside drop to the XOP 1534, it creates an agreement with a major 50% support. So that's not an area to watch for. Only if market will drop below 15 even and erase this most recent action dropping below the C lows, that tells us that probably we are getting deeper retracement here in kind of the big daily downside ABCD pattern. So that's what we have on the technical side. What actually we intend to do in practice. So as I said, we know in advance the levels that we will be watching for. There are 3 of them. Currently the strongest one, then the 50% with the XOP, and 115 is a kind of the invalidation point for a short-term bullish context. In each level, we intend to see what patterns will be formed, if any patterns will be formed at all. If we will get some patterns, we could try accurately take the positions, and the first bounce up from this more or less strong level, we have to move stops to the break-even, because risk is still high, uncertainty is high. So even if no decisions will be made, it's difficult to say how Donald Trump will actually present the results. Probably he will call himself as a winner, that he has made a great achievement, as he usually did. So that could just bring the volatility on the market, and it means that we have to be careful in the current situation. So that in towards what we have currently. If no achievement will be made in the meeting, the background, fundamental background will remain the same, and very soon probably euro currency returns back to the previous tendency that exists before that. So that is how actually this meeting is important, and you could see by the headlines in the big media how many time they spend on this. So this explains how market treat the common event. Also, don't forget that we will get also CPI numbers this week, and right before the meeting in September. So this also might have the impact on the markets. So that's probably all for now. Let's keep watching and see what will happen.